Good evening, everybody. Thanks for joining us today. I'm Vivek from Kristal.AI. We have a very exciting session planned for you, and we have like two real industry stalwarts to speak to us today. I'm personally quite excited about this particular webinar because we're talking about some very interesting industrial sectors in terms of innovation, disruption, and all that is going on. So I'm hoping to learn quite a bit myself. So just a few housekeeping details to start with. Let me just start this one. Yeah, we have, as I mentioned, two people joining me. There's Renato from ARK. Many of you may have heard about ARK already, but they're in terms of the actively managed ETFs and in the innovation and disruption sector, they're one of the market leaders. I also have Jermyn Wong from Nikko. Nikko is one of the biggest ETF providers in Asia, and they've also launched something on the e-gaming and global internet space. So obviously that's something which is directly relevant to what we're going to talk about. And I myself I'm from Kristal.AI, part of the investment committee, and so I do look at all these ETFs when they're coming onto our platform. Some housekeeping details, of course, a disclaimer. This is more for educational purposes. This is not to be construed as investment advice. If you do want investment advice, please go and log into our Kristal.ai platform. You can run the algorithm there, and you can get automated advice free of cost once you fill up the questionnaire, etc. So please. And then do that, and then you can get actual advice there. This webinar is being recorded, so for those of you who may leave in the middle, you can always join us and look at the webinars. We have a lot of webinars already on our platform. We did with other large ETF providers. Questions, please share the question on chat, and I will while we have limited time, I will try to combine them and pose them to the two presenters over the course of the webinar. We will also have a poll. So what I'm going to do is I'm going to launch a poll right now while I go through some of the other stuff. So could we launch this? Yeah. So this is the poll. What are the big ideas you're interested in, right? So these are all exciting. And we're going to talk about some of these during the course of the webinar. So why don't you please click the one that interests you, and maybe we'll focus a little bit more on that one. Meanwhile, while you do that, I'm just going to take you through why we chose ARK and Nikko specifically for this webinar. Well, both have ETFs which are actually we have investors in. So they have been both the ETFs are available on our platform, and we know that the investors are interested and have subscribed to it. So they've put actual money into it, and they've done quite well so far. We ran an algorithm which is available again on our platform. Where we looked at Sharpe ratios, we looked at relative momentum strategies, and we looked at a Bollinger Band. So what we did was we combined all these into one algorithm, and then we ran that algorithm on the number of ETFs on our platform and tried to see what kind of trend, etc. They're able to generate. And interestingly enough, I'm not going to go into the details of the algorithm itself, but this is after combining the model from those three, i.e. Sharpe ratio, Bollinger Bands, trends, etc. This is the results that we came up in terms of the ETF ranking and in terms of stock ranking, taking into a 4-year history. And it's very interesting that, of course, this ranking changes from week to week, but this is the late run for the latest week, and Bitcoin is up there, but the ARK funds are also up there, right up there, rank 2, 3, 4. So that's a very interesting thing. So this is no human interference, just a algo run based on statistical modeling, which is what Kristal.AI is kind of well known for. So that's interesting. Also, like I said, so a lot of webinars are available. This particular webinar will be available soon on our platform also. And you can see it there, but there are some others if you want to go there and have a look at it. Can we share the kind of results? I don't know what have you got an idea of the results so far? Aha, there you go. What is it? It's like artificial intelligence seems to be the number one. And thank you very much, because Kristal.AI is an artificial intelligence-based fintech. So we are right on the right track. Energy storage, robotics. Actually, the rest seem pretty close to each other. I think people have done multiple voting also. So I think people are interested in all of those. Okay. What I'm going to do is now move on to the different slideshow, which is, there you go. I'm going to pass it on to Renato and ask him to take us through the ARK pitch deck.
Thank you, Vivek. I appreciate that introduction, and thank you for everyone for tuning in this evening. Really appreciate it. In terms of background, for those of you less familiar with ARK Invest, we are an asset manager based in Manhattan, New York City, in the U.S. We have about 26 employees here, and we're managing about $28 billion across innovation strategies. So at ARK, that's our sole focus. We only invest in innovation in the public equity markets. That's why our founder, if you go to the next slide, Vivek, our founder, Kathy Wood, started the firm because she saw so much innovation taking place, and those opportunities really came from the public equity markets as everyone has flooded into passive ETFs, and at the same time have been searching for innovation in the private or venture capital markets. There's been a void left in the market for innovative companies that are publicly traded. And this relates to the technology platforms that we're investing in, which I'll get into shortly. So that was one of the main reasons why she had started the firm. She's the majority owner of the firm, and she founded it back in January 2014. We offer a number of products, which I'll also discuss later on in the presentation. The other big reason why, main reason why she had started ARK Invest was to create an open research ecosystem. And this is creating new dimensions in research. So what that means is our analysts that have domain expertise in the technologies that we're researching are pushing out their research out there for free, so that users can not only educate themselves on these disruptive technologies, many of which are impacting all of our lives, but also that attracts a lot of interest and from the experts, whether it's professors, entrepreneurs, venture capitalist investors that are driving these technologies forward to actually contribute to our ecosystem. And that informs kind of our investment process and further enhances the investment process. So we were one of the first asset managers to really become part of this sharing economy, where if you don't give, you won't get back. And that's extremely important when we're talking about disruptive innovation. Sometimes the companies that we identify as the disruptors can eventually become disrupted themselves. And so by having this open research ecosystem, we're constantly keeping up to date to the disruption that's happening across the world now that we're seeing pockets of innovation spawn throughout the global economy. And the other added benefit is for all of you that are joining, you can go to our website, ark-invest.com, under our research center portal, and you can access all this great research, again, free of charge. And so you can follow along as we're investing. And I think that's one of the important things that ARK brings to their clients is full transparency. You could follow along with our trades. You can understand our stocks. We push out a lot of commentary out there on our website. So I encourage you all to take a look after this. On the next slide, I want to touch on the main topic today, and that is really why should we be focused on and investing in innovation now? Vivek, if you could maybe switch to the next slide, please. Thank you. Perfect. So what we're seeing is, I think we can all agree that technology is changing the world, right, at a very rapid pace. But what's very interesting about this point in time in technological history is that we have what we define as 5 innovation platforms evolving simultaneously, the likes of which we have not seen in over 100 years. You would have to go back to the late 1800s to see what we would define as 3 innovation platforms evolving at the same time. That's when you saw the telephone, the automobile or the internal combustion engine, and electricity, all evolving at the same time. And what you saw was during that period, about a 50-year period, we saw exponential growth in economic growth and market cap appreciation related to the financial markets then, really leading up into the roaring 1920s, where a lot of that growth was realized. Since then, unfortunately, we have not experienced really two or more innovation platforms evolving at the same time. The last big one that we experienced was the internet, and has profoundly changed our lives and has added, based on our estimates, about $10 trillion worth of market cap appreciation to the global stock market. We think that these 5 innovation platforms, and I'll discuss each one of these in a little more detail, are going to create $50 trillion worth of business value and wealth creation over the next 10 to 15 years. And today, if you look at the stocks and the companies associated with these 5 innovation platforms, they account for less than $6 trillion. So we're expecting almost a 10x increase, right? So we're talking about exponential growth. These are massive opportunities. And what's very interesting about how investors are allocating their capital is they tend to be more focused on the broader based indices, for instance, MSCI World or S&P 500, or maybe even the NASDAQ, because they think they're getting exposure to more technology-oriented companies. But these innovation platforms go beyond just the technology sector. We're talking about technology-enabled innovation that is affecting all industries and sectors. And so what we're seeing is a lot of these companies are not held in those broader based indices because benchmarks and indices are backward looking. They're based on rules. They're based on sometimes market cap weighted rules that is rewarding companies that have had past success. And so if you constantly invest in past success, you may miss these forward looking opportunities that we've identified. So our job at ARK is to really look out 5, 10 years, try to figure out what will the world look like from a technological standpoint, and how big are these opportunities going to be, right? Are they interesting to invest in? Let's go and then go out and find who those winners in each of these areas will be. That's the hard part, and that's where kind of the team really comes and the research process really comes together to help identify who those winners will be in each of these spaces. So we think that one of the biggest risks out there for investors is that they're underallocated to innovation broadly in their portfolio, and that's hurt them this year. If you did not have an allocation to innovation and you were more broad-based focused, the fact that the pandemic has affected the stock market so greatly back in March, and what you've seen come out of that is a lot of these emerging technology, innovative companies really coming out of that stronger than ever before. And that's because they've been taking market share in this environment from their incumbents. So these are the technology platforms that we are focused on, and we didn't have to go out and chase these stocks. Stocks like Zoom, for instance, that has had great success with everyone working from home. We were there from the beginning because we were focused on these 5 innovation platforms. Now, on the next slide, I'll just go into a little bit more detail on how we identify these 5 innovation platforms. And the question we get fairly often is, why these 5? Are there others? Will there be more? And it really depends, because we look at 3 criteria that determine whether we think these technology platforms are investable now. One of the biggest mistakes that investors can make out there is investing, we see this firsthand, we see investors investing too early in these technology platforms. They get caught up in the hype of these technologies, the potential, but they don't actually do the work to understand, the cost perspective, the cross-sector ramifications, and whether they are really truly platforms, not just individual technologies that can be considered binary, whether it works or it doesn't work. So we're looking for very steep cost curve declines associated with these technologies platforms. That's how we know they're ready for prime time, right? They're hitting a tipping point in the cost structure. as consumers start to use this technology, because it hit that tipping point in the price structure of that technology, that's where you start to see exponential growth in demand. Also, these technology platforms are affecting multiple industries. It's not just one industry. AI, for example, we believe will go beyond the impact of the internet and affect literally every single industry and sector. So you ought to be focused on AI from an investment perspective in order to capture that opportunity. And then finally, these technologies, they do serve as platforms in that they serve as kind of a launching pad for other innovation to be built on top of them. So there's no if you go back to the internet, for instance, in the 1990s, there's no way you could have conceived of the idea of, say, Uber ordering taxis from a mobile phone that's connected to the internet. Just like we are, with these 5 innovation platforms, there's going to be a ton of technologies that are built on top of them, many of which we won't even be able to really truly comprehend right now because we're in such early stages. But if we're investing in those platforms, we will be able to identify those technologies when they become investable. So they have to meet these 3 criteria, and that's how we got to those 5 innovation platforms, which you'll see on the next slide. So artificial intelligence, and I'll just touch on each of these just very briefly to give you a sense on what we're focused on in each of these. Artificial intelligence is really centered around our focus on deep learning and neural nets. So what that means is we're taking the human element out of the equation when it comes to developing and deploying software. So no longer will you have to throw human resources at solving a programming problem. Now we have big data where we can feed it through these algorithms, and it actually can come to a solution. And so that will bring a lot of efficiency enhancements across all industries. We think that will create, again, about $30 trillion worth of business value and wealth creation to AI over the next 20 years. Energy storage is the second innovation platform. And this is really centered around the cost of batteries and lithium-ion batteries, which are now a big component of electric vehicles. And so we see that the cost of an electric vehicle will actually drop below that of gas-powered cars within 2 years, based on our forecast. And so we are expecting a huge shift. It's already starting, but we're expecting a huge shift away from gas-powered vehicles to EVs, because the sticker price, the cost that you pay for this car as a consumer, will drop below that gas-powered price. And you get a lot of the benefits of the EV, not only better for the environment, better specs on the vehicles. It costs you less over time, but it's not until the actual sticker price drops that consumers will start to change their behaviors. So we think this is a massive opportunity to take advantage of in the EV space. Robotics is the third, and that's really focused not on the industrial robots that you see in kind of the traditional auto manufacturing space, where they're kind of caged off robots that are building, that are really very difficult to program, take a lot of engineering time to deploy. We're talking about collaborative robots. These are robots that are working alongside humans. So more of what you're seeing in Amazon's warehouses, where there's actually robots that are picking items in place and putting them in boxes. We're at a very unique period where these robots are actually surpassing, are very close to surpassing human capability. And we don't think it'll just plateau there. They will blow past human capability and will shift some of these tasks to robots, some of the tedious tasks that we're currently doing, like putting items in boxes. That frees up our time to work on other areas, and this will create, yes, this will displace some workers, but this will create new industries, because this will make our goods cheaper, and we could produce them faster. We think there will be about $800 billion worth of added GDP in the next 5 years due to automation. And so that's what we're centered on there. DNA sequencing is the fourth, and that's all centered around the cost of a genome, to sequence your genome. And we're getting such valuable information by sequencing our genomes, and that cost has dropped a millionfold over the last 2 decades. We can go out and get our genome sequenced for $600 today. We think that cost is dropping below $100, and it's likely almost every single person on this call will in the next few years get their genome sequenced, because this helps us identify mutations in our genomes, which are the precursor to disease. And so we can identify these diseases before they manifest, and that's extremely it's extremely important. And there's also technologies being built on top of DNA sequencing, like CRISPR gene editing, which allows us to actually edit those mutations, potentially cure those diseases. Not to mention that DNA sequencing is really the foundational technology that is being used to solve the global issue that we have at hand today, which is coronavirus. It's allowed us to understand the virus better by sequencing it. It's allowing us to provide better testing. It's the chassis that drives that testing capability, and it will ultimately get us to a vaccination. So this is one of the foundational technologies we've been investing in well before coronavirus was even mentioned. And then finally, blockchain technology. This is probably the earliest in terms of stages, but nonetheless are probably, we think, one of the most impactful in terms of the financial implications. This is centered around kind of frictionless value transfer. And so what we're focused on is really Bitcoin serving as a new monetary system. And that is, we think, will take share from traditional kind of fiat currencies. So we think of it as a new asset class and almost like a new neo gold in as it serves to preserve capital and allow for value transfer across countries and the globe. And you can break down these technologies further into 14 technologies. So that's what we're currently investing in. That will change over time as we see these technologies evolve and become investable. Again, part of our job is understanding how big these technologies will be and whether it's worth the time to actually invest in the underlying companies. The other side of that, and one of the big mistakes that investors tend to make, is overpaying for a lot of these technologies. And so when we're doing this work and this unit economics work and understanding the technologies, the important part is not getting caught up in the hype and then overpaying for the company just to have exposure to that technology because we like it. We will be very patient and investing in these opportunities, and they have to hit a valuation target of at least 15% annualized return over a 5-year period. That's our hurdle rate of return to include a stock in the portfolio. So our goal internally is to deliver our clients a 15% annualized return over a full market cycle, at least 5 years. So we're very long-term oriented. We do take the market volatility to our advantage. So we use that because we think innovation is inherently controversial. So on the next slide, I'm wrapping up here just to touch on some of the products that we offer. So again, everything we do is focused on innovation. We offer our broadest strategy, which is the ARK Innovation ETF. And keep in mind, the ETFs on the left-hand side here, you see the 5 ETFs are actively managed. And the ARK Innovation ETF is the broadest of our ETFs. It incorporates all of those 14 technologies. We have 4 other ETFs that are a little bit more narrow and more thematic. So next generation internet, autonomous technology and robotics, genomics revolution, and fintech, all themes that play to those 5 innovation platforms and underlying 14 technologies. So if you want more targeted exposure, those are great solutions to include in a potential portfolio. On the right-hand side, you'll see these are very narrow, but nonetheless, we think are large opportunities. These are self-indexed ETFs, so more passive, one of which being in the 3D printing space and the other in Israel innovation. One of the pockets we're seeing for innovation, but many investors are underallocated to that. So this is to provide kind of broader exposure to that region. So with that, I will pause there and maybe hand it back over to Vivek.
Yeah, thanks a lot for that. What I'm going to do is just, you didn't discuss about some of the performance of these ETFs. So I'm just going to take a little bit of a breaker there and show you how actually you can access these ETFs on our platform. So effectively, if you just go into a Kristal platform, you can, go into the products, and we have obviously a lot of products available, but we also look at the ETFs here. And some of these are ETFs, which of course we cover all the major producers. But if you look at the popular ETFs and you look amongst them, then you will see a lot of them are to do with ARK. So this is not actually, again, this is not manual. This is not, we put them on there because we were doing this webinar, but we put them there because they're actually very popular with our investors, and you can see the returns, and they're all obviously leading the market in terms of returns. But of course, we also have, we would advise you to have an allocation in your portfolio. So we also have bonds and commodities and equities. But you can go up there and you can look at what's popular, and all these ETFs can be found there. Just to show you, you can also look at the Nikko one. Nikko e-gaming has been doing very well recently, and Jermyn is going to speak about that later. But just I wanted to show you there. You can go there. You can look at analysis on that ETF holdings, on platform returns, and some more details. That's a relatively new one, but that's also possible to access on our platform. What I'm going to do also, now I'm going to take a few questions actually, if I might. We've already seen some questions coming in. So first one I want to ask you, Renato, is about the recovery, right? So we're having a lot of discussion about what kind of recovery it will be, whether it'll be V-shaped, U-shaped, L-shaped, and obviously the returns are going to be linked to what kind of return recovery there will be. What are your views on the recovery, and how will innovation disruption play out versus the real sector in this?
Excellent question. So prior to the pandemic, right, we saw inventory levels dropping, and consumer confidence on the rise. So there was a shortage of inventory, and we were expecting manufacturing to really start to pick up. Now that was put on hold as a result of the pandemic, right, with supply chain disruptions, and lockdowns. And what we've seen is that the savings rate for consumers is on the rise. It's come back down a little bit as some of these countries are starting to open back up. Certainly here in the US, we're starting to see that, but they're still much higher than normal, which signals to us that there's a lot of pent-up demand. And because the inventories have been depleted, and consumer confidence is starting to rise as these countries are starting to open back up, we think that pent-up demand is really going to lead to a V-shaped recovery, which we've already kind of experienced. And we've experienced this V-shaped recovery, especially in the innovation side, because a lot of these technologies that we're focused on and investing in are part of the solution. I mentioned earlier, genomic space, but they're also these innovation platforms are gaining traction. We actually see, we've done a lot of work on kind of our adoption curves for these technologies. And what we've seen is there's an acceleration for many of these technologies. For example, digital wallets, people were scared to use cash because it was a super spreader of disease. So we saw an increase in digital wallet downloads and use. We've seen on 3D printing side, because of those supply chain disruptions, manufacturers were turning to 3D printing to kind of finish their end product because they had supply chain disruptions, and they realized, hey, this is a better technology. I can get these last parts. In some cases, there were ventilator parts much faster than having to wait for them to be shipped from another country. So all of these technologies were gaining traction. And so that has led to kind of this V-shaped recovery in innovation. I mean, we've seen it in the broader economy, but at the same time, because we're focused on disruptive technologies, not only are we looking what the future will look like and how the impact of these technologies will be, but we're also seeing a lot of destruction of capital. And so we see a lot of industries becoming more under pressure, like traditional auto manufacturing, those that are focused more on gas power, because we think we're seeing acceleration in electric vehicles. So there's pockets of the economy that we think will struggle, And there likely will be a lot of companies that unfortunately go bankrupt. But if you're focused more on innovation, these are the new leaders that will emerge. So we are continuing to expect. There's also, the last thing I'll mention is kind of the monetary and fiscal policy that is serving as a tailwind, certainly in the U.S., but other parts of the globe, to kind of help stimulate the economy. That should only further help with this V-shaped recovery.
As a follow-up to that, I'm going to ask you one question, then I'm going to move to Jermyn, and then we're getting a lot of questions, but the technology specific or the industry specific, I'll wait for later. So one of the very interesting question is that ARK seems to be very geared towards a very aggressive market positioning in terms of, if the markets are rallying, obviously ARK does very well and so on and so forth. What would you do in a defensive kind of a scenario where there's like maybe increased volatility, or how would you go conservative, or would you always be an aggressive portfolio?
Yeah, that is a great question. So what we typically do in when we start to experience a period of higher volatility and almost like a risk-off period where people are pulling out of some of these higher beta aggressive stocks, what happens is, especially if we get a broad market sell-off, one of which we experienced back in March, what we do is consolidate our portfolio into our highest conviction names. This is typically the opposite of what growth managers do in this environment. They tend to actually diversify their portfolio and add names and go back to the benchmark because they don't want to severely underperform their benchmarks. But we're doing the complete opposite. We believe in our research, and because because investors will kind of drop these higher beta stocks, they become disproportionately punished. So we lean into that and we buy more of those stocks. And what usually happens is, in some cases, we'll underperform in those risk-off periods, and we've been very transparent about that. But about midway through that correction, that's when things will start to turn because these companies are gaining traction in this environment, right? When consumers and businesses are looking for cheaper, faster, more efficient solutions to the problem, especially in say, a recession, these innovative companies will be there to provide that service at a cheaper, lower cost. And so what they do is gain market share. And so what you'll see, and you go back to the last, the history of our firm and the strategies track record, you'll see that in these subsequent risk-on periods after the market pullback, that's where we tend to significantly outperform in those environments. So that's generally a good time to, when you get these market pullbacks, to start to leg into a strategy like this. We're very tactical. Valuation is very important to us. So we will be very patient. We are not momentum driven. We're not chasing after these opportunities. We will sit there, be patient, wait for pullbacks, and build our position over time. And at the same time, when we see some of these stocks experiencing parabolic moves and the valuations exceed our targets, we will take profits. So we're very active in our trading. We're not buy and hold.
Thanks a lot. I will come back to you, but meanwhile, let me pass it on to Jermyn, and then take it away, Jermyn.
Sure. Thanks, Vivek, and thank you, Ren. Well, good evening, everyone. My name is Jermyn. I'm the head of Asia ETF Business Development at Nikko Asset Management, and today, really, I'm going to talk about the outlook on e-games. We do have an e-games actively managed ETF listed on the Hong Kong Exchange. It is on Kristal.AI's platform, and that is the product and the outlook that I will be covering today. Well, Nikko Asset Management manages 6 ETFs across Singapore Exchange and Hong Kong Exchange. And I personally, I've been with the firm for close to 7 years now. I've been partly responsible for the launch of 2 ETFs in Singapore and 2 ETFs in Hong Kong, including the e-games active ETF. And personally, I have never been so excited to share with our investors about e-games, about this particular sector, because I just feel that this is a theme with great growth potential and presents a very compelling investment opportunity. Before I go into that, I'll just do a really quick introduction of Nikko Asset Management. We are one of Asia's largest asset managers with assets under management of over $200 billion US. Approximately 34-35% of that is in ETFs. We have about $80 billion USD of AUM in ETFs listed across Japan, Singapore, and Hong Kong. That positions us as the top 10 ETF issuers globally. We are ranked number 2 in Japan in terms of AUM and number 1 in Singapore. Nikko AM is no stranger to ETFs. In fact, we have been managing passive funds in Japan since 1986. We've been managing ETFs in Japan since 2001 and in ETFs in Singapore since 2005. We are one of the largest ETF issuers in Asia, and we have won many, many awards. Now, let me just show you some stats on the global e-games market. As you can see, since 2012, global gaming revenue has increased very substantially. In 2012, it was 70 billion. And in 2019, just last year, looking at 152 billion US dollars. That's 11% compounded annual growth rate year after year for that period of seven years. In fact, it's more than doubled over 7 years. So while we see growth across all aspects of gaming, mobile gaming, PC gaming, as well as console gaming, it really is in mobile gaming where we have seen the largest growth, a compounded annual growth rate of 26.8%. Well, and this really is largely due to developments in mobile technology, better phones, better graphics, better internet connectivity. Many mobile games are designed to be more casual as well. It doesn't take up too much of your time, but yet at the same time, they probably have some feature to lure you in to play at least a few minutes every day. For those of you who play mobile games, I'm sure you know what I'm talking about. And of course, from a commercial perspective, there are more monetization opportunities, advertising, in-game purchases, and this creates incentives for game developers to launch new games. So really, as technology and connectivity continues to improve, which I firmly believe that it will, it is then very likely that the game sector will continue to evolve and also grow. Let me just take everyone back 50 years into the past, when the Apollo 11 touched down in the Sea of Tranquility on the moon on the 20th of July, 1969. It was a momentous event, a breakthrough in human history, but more than that, it was also the story of a technology wonder in its time called the AGC, the Apollo Guidance Computer, which is this very unimpressive looking calculator-like machine that you see on the right-hand side of my screen. And this was the computer that helped astronauts safely navigate to the moon and back. And today, to put things in perspective, our phones are a rough 66,000 times faster than the AGC. And that is how much technology has improved over the years. And of course, with it, human behavior, the way we game. There are 2.5 billion gamers worldwide. And I think this is a number that many people have kind of underestimated. In fact, when I speak to investors, this tends to be a number that shocks them. 2.5 billion means 1 in 3 people worldwide do play games or have played a game before. And bear in mind that this includes the population, the human population in the rural areas, in developing countries that may not necessarily have an internet connection, may not necessarily have access to electronics. So if we were to if we look at this stats, let's say in developed nations, I believe that the number will be much higher. Instead of 1 in 3, I believe it could quite easily be close to 2 in 3 people. And it's not, and there's a huge diversity of gamers, especially in Asia. I think most people tend to have the impression that gamers are confined to teenage boys who lock themselves in their rooms all day and play games. But that's absolutely not true. Well, it is half true that that if you look at this picture on the left, it is half true that that is the largest proportion, that is the largest demographic, but the diversity among gamers really is across the board. It is across all age groups, from 10 to 20, even from 51 to 65, and it is across, rather, it is actually quite equal amongst both genders, male and female. 46% of gamers are women, and 54% of gamers are men. And just to substantiate this, let me introduce you to Hamako Mori, who is nicknamed the Gamer Grandma. She is based in Tokyo. She is 90 years old, and she plays games on a daily basis. She plays a whole range of games, some of which you might be familiar. Call of Duty is one of them. And she does not only play games, but she streams her games real time. So if you watch any of her videos, she'll first come up in front of her camera. She takes a bow, says konnichiwa, very courteous, and then she sits down and she starts playing games, and then she transforms completely. She is a very competitive gamer. She has 3,000 subscribers on YouTube, and people follow her and watch her play games on a daily basis. Which really brings me to my next point, that gaming today has evolved. It's really not about just consumers paying money and spending money to buy games and purchase games to play games. But today, consumers are actually very willing to spend to watch other people play games. Gaming has become a form of entertainment. I don't have this in my slide, but maybe I'll just show you a picture. Apologies, please bear with me. If you look at this picture, when I ask people and show this for the first time, many of my friends think that this is a concert. It is not. This is the 2017 League of Legends finals in Beijing. The stadium was full of 40,000 people. Tickets were completely sold out. In 2019, it was held in South Korea. That stadium was smaller, was about 20,000 people. It also was completely sold out. So gaming today, League of Legends, which is one of the more popular competitive games, in 2019, they saw a viewership of 44 million, and that is substantially more than Wimbledon or the NBA for the finals alone. And that really is the scale of esports today. So gaming is not just gaming anymore. It has transformed into a sport, a form of entertainment. And this picture here, this is a concert, but this is an in-game concert. So this was held in Fortnite, one of the more popular games today. What they did during the COVID period, when everything kind of was on lockdown, was they actually hired an American singer, I believe his name was Travis Scott, to come in to DJ and to hold a concert in the game. So gamers from everywhere, all over the world, all over the land rather, came to this particular island in the game, from what I understand, to participate in this live concert. There were music, there was lighting, and they could use their avatars to run around, fly, jump, and whatever you do in the game. There were close to 12 million people that attended this concert. I don't think it was all at one shot, but it was probably recorded and played later on, I'm not sure. But there were close to 12 million people that actually attended this concert. And really, I think not only has gaming transformed, but the opportunities and the possibilities within a game, within the virtual reality, is limitless. Today, they hold a concert in-game. Perhaps in a few years, we might be holding a financial webinar in-game. You know, we never know. So that really is the power and the limitless opportunities of gaming. If I just go back to my other So for the e-games ETF that Nikko Asset Management manages, we really invest in the entire ecosystem. So gaming is not just, well, of course, there are game developers, but it's not just about game developers. Examples of game developers would definitely include companies such as Activision Blizzard that owns developed the whole Warcraft franchise, Square Enix that developed Final Fantasy, game developers like Tencent. So these are the classic examples of game developers, but not just that, because when we look at e-gaming, we want to invest in the entire ecosystem. We want to invest in the support services, the hardware and software applications, the game streamers, the chip manufacturers, the monitor manufacturers. And more than that, we also want to invest in communications and infrastructure. So the telecommunications companies, the companies that will roll out 5G, such that there will be better connectivity and better all-round support and infrastructure for the entire gaming sector to grow. So that really brings me to the end of this very brief presentation. There is a lot more information on the Nikko Asset Management website. There is, I believe, some information as well on the Kristal.AI website on the ETF. So if you're interested, do come to the website and take a look.
Thanks, Jermyn. Yeah, people have been coming and looking and buying actually. So, that's going. In fact, I have a question. There's a question from one of the participants about investing in ETFs. So I'll take that one. When should one buy ETF? Should one buy it at a lump sum, or should one buy it like under a standard investment plan, and so on and so forth? So, our view at Kristal is basically that you have to be always invested in the market, right? There's no point holding cash except to the extent of the one which you need for like 3 months or 4 months or 6 months or some emergencies. Besides that, you have to be always invested in the market and do not try to time the market. What is important is remaining in the market rather than trying to time the market. What you invest in is, of course, an allocation decision, and it would be, you would have obviously some degree of investment into fixed income and some into broad market indices, and then of course some part of it should go into ARK, Nikko, and all these actively managed ETFs also. So so if you have already invested, then you can have an SIP to incrementally invest more. But if you don't have any investments, there's really no point in staying in cash or even fixed deposits which pay you nothing. So that's our response to that. You have to be invested at all times until you retire, and then you are drawing down on your investments to spend. One question for you, Jermyn, is basically, you mentioned that there are game developers and there's hardware and there's communication infrastructure. So besides the really innovative aspects of game developers, there are also other industries that are part of this ETF. Do you think that these traditional sectors will drag down the returns on this ETF, or because I understand the gaming and the excitement and the innovation there. What do you think about the other 2-3 where you're putting money in?
Yeah, no, absolutely not. At least we try our best not to let that happen. For us, the rationale is quite simple. If there isn't mobile phones, there will not be mobile games. So we don't want to just look at gaming and game developers in itself, but really the entire ecosystem. This is an actively managed ETF, just like ARK's ETFs. It is the first actively managed equity ETF in Asia. And in stock selection, we do a bottom-up approach. So with every company that we do invest in, we look at a whole range of, there's a very robust investment process. We look at a whole range of factors, including valuations, including source of revenue, including potential outlook and even macro environment. So really, I don't think that investing in certain stocks would have a drag in performance. The reason that we choose to invest in them is because we believe in the outlook of these companies.
Thanks, Jermyn. So we're running out of time, but I have a couple of last questions for you, Ren. One of them is on the EV, the electronic vehicle and the battery technology and so on and so forth. So obviously a lot of action happening in that market with, GM and Nikola, and then, a lot of China players getting into the game. How do you visualize the competitive landscape, and who do you think will be the winners? I know you're a big holder in Tesla, of course, but how do you think it will stream out over the next 5 to 8 years or 10 years?
Yeah, so we're looking at, from a top-down perspective, we're looking at the entire EV industry, and so our forecast, for instance, for year 2024. We're forecasting 37 million EVs will be sold globally, right? So if you look at consensus right now, they're estimating 4 to 6 million. So we're almost 10 times higher than that forecast. And I think what they're missing there is the cost decline associated with EVs and the fact that they will become cheaper than gas powered. So that's roughly about half of the global vehicle sales today. So we're seeing EVs take significant market share in vehicle sales. Now, we think China is going to be a huge driver of that number. But one of the risks to that forecast actually is traditional auto manufacturers, especially here in the US and in Europe, not delivering on EVs. So one of the areas that we're really looking at is the technology side, the actual battery systems and the cost decline associated with them. So that's why we've been so focused on Tesla, because we think they're 3 years ahead on the battery and the battery chemistries and the cost decline, that they are able to kind of get to a lower cost and kind of price out some of their competitors. And their range on their batteries or battery efficiency is much better than competitors, so traditional auto manufacturers. There's also another part of that is autonomous vehicles, right? So we think autonomous vehicles are coming. It won't be tomorrow, but they are coming within the next 5 years, and they will be electric. So we're looking for auto manufacturers that have some type of autonomous roadmap. So we're looking by geography. We've assessed the landscape here in the US. We're assessing the landscape in China. And China, unfortunately, is very fragmented. There's hundreds of EV manufacturers. So to us, as we're doing the research, it's very difficult for us to identify who the winner will be in that space. There's NIO, there's many of them out there. So it's something we're still kind of monitoring. Right now, we just haven't gotten comfort on being able to identify who that potential winner, but we think it will be kind of geographic monopolies in each of these regions. So that's how we're kind of tackling that.
Final question for the day.
Okay.
You mentioned blockchain, and obviously always that attracts some controversy. And you mentioned that you're talking about storage and cryptocurrencies and so forth. So does that mean that you will be that ARK will be buying Bitcoin anytime soon, or you believe in just the software enablement part?
Yes. So part of our blockchain thesis is around Bitcoin. In fact, we were the first public asset manager to gain exposure to Bitcoin in our ETFs. So that dates back to 2015. We had exposure to Bitcoin in the ARKK ETF, as well as the ARKW, Next Generation Internet ETF. And that was through an over-the-counter traded product called the Grayscale Bitcoin Investment Trust. Fortunately, there's not many options to gain direct exposure in Bitcoin through an ETF structure here in the U.S. But that is one of the main ways that we can do that. And we've had exposure in that. Right now, we do not have any exposure to Bitcoin in ARKK, but it is there's about a 2% position in ARKW. That is still very a high conviction theme for us is blockchain, and specifically Bitcoin. We think that will be the leader. What we're seeing is there's a battle over sovereign and non-sovereign, and again, I mentioned earlier, we think Bitcoin is in kind of the pole position to be a winner in that space in terms of cryptocurrencies. We have a dedicated crypto asset analyst. That's all he does, and we've had one since 2015 when we did that early work. Kathy has gone back, and Brett Winton, our director of research, had been looking at Bitcoin going back all the way to 2011. So it's something that we think is very transformational, and there's a lot of investment potential there. If it were to, we think it could be worth, I mean, right now it's valued in only a few $100 billion market cap. We think it could be in the trillions in the next 5 years. So early stages.
Okay. Thanks a lot for that, Ren. We have, I'm sorry to all the participants. We've got a lot of questions. Unfortunately, we don't have the time to answer it. But, we'll try and get back to them, get some of the questions. If you send us a message to support@Kristal.AI, we'll try and get some answers from the participants. With that, thanks for coming. And, Ren, I know it's like a really early morning for you, but thanks for waking up early and be with us.
No
and
problem.
Thanks, Jermyn, for putting this together. You were invaluable in actually managing this whole process where we could have this webinar. Thanks.
No problem. Thanks for arranging. And thank you everyone for attending today's webinar.
Thanks.
Thank you. Take care.
Bye-bye.